Hello and a very warm welcome to NDTV Profit. I'm Vikram Oza. Now, if you look at the way the prices of the yellow metal have panned out in recent times, you can't take your eyes off the way they've moved. Whether you look at it as jewelry, as part of tradition, you look at it as investment today, it's a hard asset today under the spotlight globally, and here in India, where prices have surged to all-time highs, we've seen gold driven by this complex mix. There have been inflation worries, and you're looking at gold as a hedge. Then there are geopolitical shocks, and yes, central bank buying. A lot of it has happened, which has all pushed up the price of gold. And retail investment flows are also determining how these gold prices are moving. So we've seen global gold demand reach this record quarterly figure recently, and central bank purchases, they remain elevated. So in India, gold imports, they're spiking ahead. We've seen that spike happen ahead of the festive season. It reflects both investment and consumption behavior. But against this backdrop, it's important to understand where gold is going from here and how it's reached where it is. Sachin Jain is joining us, and he, of course, is the regional CEO for India at World Gold Council. Sachin Jain, such a pleasure having you on.
It's an honor and pleasure to be here on your platform. Thank you very much for having me on.
Sachin, you have to explain to us the way gold prices have been moving, because to someone who's been investing and has had a diversified portfolio, gold is a story in itself, because the ones who were lucky enough to have a lot of gold bought in recent times, or of course what you're sitting on over a long period of time, and that happens a lot in India, they consider themselves lucky. But there is a method to this madness, and I just kind of walked over the kind of reasons that we've seen gold prices go up to the levels that they have. But in your opinion, since you study gold so closely, why are we seeing gold prices move the way they have been in recent times?
Vikram, I think it's an obvious question, and all of us get surrounded by the same questions around what's happening in gold.
Yes.
And I think let's look at the core pillars of what gold is and what gold promises. So gold is a great hedge, an all-time hedge. Go back to millennia, go back to kingdoms, it was a great hedge then. It's the most liquid asset, right? It's continued to be standing on that promise. And it's a great safe haven. And great safe haven is an important promise of gold that has again stayed through millennia. Now, having said that, if you look at what's happening globally from a geopolitics perspective, economic perspective, I think the pillars on which gold prices is built on are pretty much in favor and have been. Last year, it was the whole conversation of de-dollarization, around geopolitics shifts, which have been permanent in nature.
Yes.
And I think that triggered off central bank buying. Last year, the year of 2024, we saw record high buying by central banks. And as World Gold Council, we actually study a lot of central banks, and they've indicated to us in our researches that they will continue to buy or invest in gold, not just for 6 months, 8 months, but continued as a strategic asset. So that's one. What's happened this year is that how gold performed last year and the continued interest of the financial investor is an all-time high. So it triggered off with the EDF buying in the Western markets and the Far Eastern markets, and generally the way the asset class has performed. I mean, last 18 months, we've seen 84 all-time highs, historic highs of gold.
Yeah.
Just this year, we've seen over a 60% return on the price of gold from 1st Jan till now. So these elements have been unprecedented. And as you said, historic on one side, but I think it's a lever that we're seeing a new way that gold is going to be consumed. And I really think that this phase is where gold will be the new gold.
So gold being the new gold is a classic line. At this stage, when you talk about sustaining the kind of levels, because everyone is talking about how central banks are also buying at such elevated levels. So where are you expecting gold prices to go is the natural question. Anyone who's making an investment call today and looking at a diversified portfolio, for a certain amount of time and for long years actually, when you go to a financial planner, they'll say 5 to 10% kind of asset allocation for gold is normal. Now, is that changing very drastically?
Well, I think from your perspective, our recommendation on your portfolio diversification remains at 10 to 15%. But what's actually happened is that over the last 18 months in particular, when we've really been on the limelight and the spotlight, people have actually looked at their portfolios and seen that there was an instinct to say, yes, I had that much gold.
Yes.
But there wasn't really that much gold. And people are making those scientific corrections as we talk. Very large institutions like Morgan Stanley, who used to recommend 60% equity, 40% debt, have redefined the investment strategy and talking about 60% equity, 20% debt, and 20% gold. So I think those are changes that we witness as we go along. And that's the new gold that I'm talking about.
Right.
Because when you diversify with gold as an important hedge and diversifier, it does a lot of good things to your portfolio in general. it makes it healthy. I mean, a year like that, where a year like 2025, where the equities haven't been on the top performer, your overall portfolio still has been much more healthy and doing well.
See, the other aspect about precious metals, and it's important to understand because silver had been running very fast as well. So when you look at the entire precious metals basket and you talk about the uses of gold and you see the kind of runway that you have in terms of growth for gold because of the kind of demand that you're likely to see, whether it's investor-led demand or whether you're talking about industrial demand, all of that needs to be considered when you kind of make a projection of how gold prices are going to go. So when you do that for us, as someone who represents World Gold Council, how are you seeing gold prices? What is going to be the driving factor for these prices? What's going to lead? And perhaps what's going to change in that entire mix?
Sure. So firstly, I'd like to clarify that as World Gold Council, we don't project any pricing. However, I can talk about the pillars and the science behind and the whole discussion around
the sustained level.
That's right. So let's go back 30 years. 30 years back, the main usage of gold was jewelry. Central banks were the net sellers of gold. Let's come to 2025, a phase of right now. Today, we have broadly 4 areas of consumption. We have central banks that buy, central banks including like countries that are increasing their own strength and on their liquidity and their own hedge with gold. That's one. Secondly, we have investment demand. That has grown dramatically. I mean, just this year, the investment demand for gold will increase or across $6 trillion US. Let me translate that number in INR. That's 18,70,000 crores of gold traded every single day. That makes gold as the most liquid asset on planet Earth. That's the second demand. Third, of course, is the bullion and the jewelry, which continues to be very strong. And in India, we don't have to be in any economic strata to consume gold jewelry. We don't have to be in any regional strata. All of us consume gold, right, from that perspective. And the fourth, in the emerging area that we witness now, is technological demand. And as we see the AI getting more and more democratic, the faster chips and the dependable chips now are using more and more gold. So the usages of gold from a technological perspective will be a very important lever as you go forward. Now, when you look at all of this in consideration and the phase of almost a new diagram of geopolitics, almost a new landscape of investment, I think the pillars on which gold prices are built on are pretty much in favor of gold. But I would only like to say that gold should be looked at from a long-term lens.
So when you see institutional investments into gold, are they doing it differently as opposed to when prices were not as high?
Well, yes. I mean, the interest is very high. And we saw that the ETFs, particularly in the Western markets, and I'll give you an answer from a global perspective and what's happening in India. And from a global perspective, the ETFs, which did a lot of encashing beginning of 2024, came back in the market with venom this year. And we've seen that a lot of institutional buying is sticky investments. They don't buy and sell on a day basis. So those sticky investments have come into gold from a global perspective now. When you look at India, there is a combination of physical gold that institutions are consuming and family offices are consuming, and also ETFs.
Right.
And I think a product like ETF, which is transparent, it's regulated, and a guy on the street, a simple man on the street, doesn't really know what an ETF is. One, we've named it ETF, which seems very dangerous, and we need to simplify that area. But I think that a product like ETF is at the cusp of growth. Elements like digital gold, like today we have over 8 crore consumers that have used or consumed digital gold, which democratizes gold. You can buy as low as 10 rupees. Unfortunately, that's not regulated as yet. And there's work happening in the background to bring regulations around it. But I think fundamentally, when you look at India and the demographics of India, and when you say our median age is 29, and the relationship that the young India has with digital, with their mobile phone, historically, a consumer was happy to buy physical gold, put it under the bed and feel very happy and confident. And I think that relationship of owning assets on a digitized format is changing. And I believe that digital consumption of gold is here coming in a very big manner.
So all of that changes the entire picture and how we approach gold as an asset class, doesn't it?
Absolutely. So let's talk about the core numbers. I mean, in India, we've seen broadly the consumption varying around or hovering around 800 tons of fresh consumption of gold that we see. Now, about 70% to 75% of that is jewelry. About 25% of that is around investment demand. And within that investment demand, the larger pie is for physical bars and coins.
Right.
That you go to a jeweler and you buy it and keep it in. Whereas the smaller percentage is from products like ETF and digital gold. And I think to your point, Vikram, I think that pie, firstly, I think the investment pie compared to jewelry is going to go more forward in the favor of investment demand. I think that's certainly a change coming in. And within that investment demand, I foresee that a lot of digitization, because what it does is it brings you that transparency, brings you that confidence, and gives you, not a risk to carry physical gold and protect it, because it's there, it's protected by the government and some great SEBI regulations. So I think that's the change I see.
As we move towards that vision of a Viksit Bharat 2047, I'm just wondering what role gold is going to play in being able to achieve that entire goal. When you talk about unlocking the value of gold, like you mentioned, we stored gold, right? We kind of kept it away and said, this is good for a rainy day because it's a hedge against inflation. But that entire approach to gold is being turned on its head. What do you agree?
I think it's such an important point that you raised. And around, we all hear about the phenomenal destination that our respectable Prime Minister laid out of Viksit Bharat and how we will move from the current perspective to a developed nation. But it also is this phenomenal numbers of $4.8 trillion economy becoming $30 trillion economy. And that really means 5 new Indias will get added up over the next 22 years. Now, as World Gold Council, we've been working on a project called Swarnim Udan 2047. And the intent of that project is to really completely align with all stakeholders, including futurists, policymakers, and the industry, as to what's the role of gold in that Viksit Bharat.
Right.
What are we going to deliver? What do we need to be getting ready now? Today, we employ over 5 million people in the industry, which is massive. Will we employ more? Today, we deliver about 1.5 to 2% contribution to GDP as gold industry. Will we continue to do that? And there's a lot of work happening there. And the intent is to create a clear roadmap as to what will happen in 2047, what we need to get ready in 2040, 2035, and 2030, and today. About 20% of our gold demand will come from our own gold. And there's reasons why we need to trigger mining. We're talking about gold, India becoming the jeweler to the world. Today, we are a net importer, and we believe there will be net export with value addition getting out of India. So lots of exciting things happening, but the belief of the dependence or the important leg and the contribution gold industry will make in a Viksit Bharat is here to stay.
So that's very exciting. But you did mention mining, and there is this entire global conversation about sustainability. Whether you're talking about the sourcing of gold, whether you're talking about the entire way in which we recycle as well, and that a lot of that is already happening. I was talking to some jewelers around the festive time as well, and they're saying a lot of people are bringing gold that had been put away in lockers, and they are refurbishing it. They're kind of making it more user-friendly for current times and the current generation. So if you are going to see a lot more of that, how does that impact how the gold economy works in India and how that compares with global trends?
Well, I'll answer your question in 2 parts. Firstly, you talk about recycling. And one of the largest mines in the world that exist is the gold sitting in our households. And we've always been talking about how does this bring into usable and productive use.
Exactly.
And I think that we're working with the policymakers around that conversation. And I think there's technology is the answer, privatization is the answer, and I think there's work happening around that gold is not just sitting inside households as a sleepy asset, but is put to productive use of our nation. So right. I think that's a good news. Now, you asked me about what's happening with global trends, and I think if you look at a country like China, which about 25 years ago was a net importer of gold like we are, and today they are the largest mining country of gold in the world. And I think with the geographical bent that we have, there's potential to explore that, which we should. And from a sustainability point of view, there's some phenomenal work that World Gold Council has led along with our mining partners. And we want to ensure that every element of what we mine, how we mine and everything is something that all of us can put our hand on the heart and say that we feel proud about it. And that's happening. Now, elements like blockchain technology are getting more and more clearer. Now, almost all gold that gets mined will be put on blockchain, will go through the different exchanges. And in the future, you'll have 3 things that you can be fully confident about in gold. You will see that gold is accessible, so it will behave like any contemporary asset class, so accessible 24/7. Number 2, it'll be fungible. It can move from one organization to the other, one country to the other with no problem. And thirdly, and the most importantly, it'll be authentic. When you say it is what it is, and it'll give a big confidence on the source transparency that everybody or every element that's been touched upon it has stood to high standards of sustainability and has done something good to the world.
What could be the risks involved when you look at this level of confidence in gold right now? Because everyone's looking at it like that, right? From central banks to consumers, investors, all of them.
Yeah. So I think it's a great question. And from my perspective, there are 2-3 paths, which means consumers consume gold and what's happening in the market. So as I said, globally, there's a lot of work happening on digitization of gold.
Right.
And hence bringing transparency, hence bringing that confidence. And we're working with nations and banks to make that change. Artisanal gold mining, there's a lot of work happening there. So that, and artisanal is not bad. The idea is that if somebody is working hard to bring in gold to put food on the table, then it should be recognized within central banks. So we're doing a lot of work there so that gold in the systems is right gold. It's done good to the planet, good to the societies, and that's one part. When you look at the Indian society, great work that's been done under the Consumer Affairs Ministry. Over the last few years, we've been working with them, and I'm very proud to share with you that ours is the only country where every gold jewelry piece has a hallmark, and that can be traced back to the purity. Now, there were always issues around purity of gold that we've all lived with.
Correct.
We all had a family doctor, we all had a family jeweler.
Right.
And the confidence was almost shaking, where the government has made some phenomenal steps to bring transparency, where every gold jewelry piece by law has to have the transparency. That's one. We also initiated the first self-regulatory organization in the gold value chain. It's called the IAGES, India Association for Gold Excellence and Standards. It's the first self-regulatory organization in the gold value chain. So there is a regulator in the government, there's industry, and there's self-regulation that's been ticed up now. And what that will do is to bring more transparent code of conduct and transparent ways of operation. So there's lots happening where a consumer will have the choice that, it's not opaque buying.
So when you see the kind of demand that is panning out in India, and you compare that with what's going on in the world, 18 karat, 22 karat, 24 karat, there are certain trends and there are certain choices that we as consumers make. And indeed, as investments, you are going to be seeing what the future holds. So in that sense, what are the big trends and where is India different from the global trends?
Well, I think let's talk about jewelry first. So when you look at the Western markets, for them, jewelry is a form of accessorization. It's not a form of asset built up. Like when we all go on Diwali and buy jewelry for your loved one, then in the hearts and minds, you know that the asset of the home is getting increased. Now that sense of store of value is very different from a global perspective.
Right.
And hence, right now, go back to 2001. That's the year I got married. And at that time, the price of gold was about 4,200 rupees per 10 grams. Now, today, of course, it's historical, where we are sitting today. But even that time, and since then till now, the broad consumption of gold has been around 800 tons every year. Now, India has caught up with the pricing.
Right.
And we always find it's expensive. We always find that we're late in the rally, but it's gone up and we caught up. And that completely triggers off the fact that the confidence of India on gold is very strong and high and will continue because the incomes are changing. And there's a pyramid, in the pyramid of economic strata of India, there is a line of or a certain consumer who's getting more aspirational, has the wealth, and will express by consuming gold and other asset classes.
So when you're kind of hedging risks, gold's role has been there. It hasn't changed over time. But now when you see this increased kind of buying and how central banks are buying so much more gold at elevated levels, one wonders whether it's a function of the de-dollarization, where they don't want to kind of hedge their bets on the US dollar, or is there something more to it? Because on a larger scale, how gold demand is changing and how central banks are going after gold, that begs the question about the trends that we are likely to see, because then there is a lot of reflection that you see in consumer behavior too, seeing the kind of data that central banks present.
Yeah, I mean, I think 2024 was an iconic year from a central bank's purchasing point of view. We crossed 1,000 tons in central banks buying, and the difference was that last year we had a few central banks, primarily the emerging markets, buying a lot, buying almost hysterically. The difference we see in 2025 is that those banks have continued buying, but there's a long tail of smaller countries and smaller central banks that have gone to the rally of buying.
Right.
So it's slightly more widened out. And it's an important point because this conversation of de-dollarization and the conversation of holding some asset that a country can completely depend upon is increasing. And I foresee that these shifts of geopolitical are permanent in nature.
Right.
They're not a shift for a day. It's not just because of leadership in A country over B, but I think countries want to get more self-reliant, and I think gold will be continuing to be an important hedge for them. We as World Gold Council work very closely with the central banks, and we conduct a survey every year with almost about 90% of the central banks globally. And almost every bank has come forward to say that it's not that they're going to continue to buy gold in the next 5 months, 6 months, 1 year, but as a strategic investment into the future.
So can't let you go without asking, on behalf of a lot of investors over there who are watching gold and the prices, the way they're moving, when you consider asset classes today within real estate, equity and debt, now with gold, how should that mix change according to you?
Well, I think we, as World Gold Council, our recommendation still remains the 15%, 10% to 15% of your portfolio, but be true to that 15%. It's not about how much jewelry your mom has or your sister has or you have at home. It's about really a financialized asset that of 10 to 15% will do a few things. It'll make your portfolio much more healthy, much more diverse. Of course, all the sort of core pillars of gold, which is about liquidity as hedge, stand on. So my recommendation is, one is about that percentage of diversification, and secondly, look at gold from a long-term perspective. I think with how the world is evolving, this asset class is going to deliver for sure much more strongly as we go with a long-term view, not necessarily a daily trading view.
Not a daily trading view, but gold is the long story. And of course, we've tried to kind of compress it in this short span of time, but we've got a lot of perspectives on a lot of different aspects that govern the kind of price movements that we've seen on gold. And for that, we thank Sachin Jain of the World Gold Council. Such a pleasure having you with us on NDTV
Thank you, Vikram.
Profit.
It's a pleasure for me to be here. Thanks a ton.
And thank you for joining us on NDTV Profit. Of course, all the news, all the updates right here on the channel. Keep it with us.